Good afternoon, ladies and gentlemen. Welcome to the ZYTRONIC PLC investor presentation. Throughout this recorded presentation, investors will be in listen-only mode. Questions are encouraged and can be submitted at any time via the Q&A tab that's just situated on the right-hand corner of your screen. Please just simply type in your questions and press send. The company may not be in a position to answer every question it receives during the meeting itself. However, the company will review all of the questions submitted today and publish responses where it is appropriate to do so. Before we begin, I would like to submit the following poll, and if you could give that your kind attention, I'm sure the company would be most grateful. And I'd now like to hand you over to Acting Executive Chair, Mark Cambridge. Good afternoon, sir.
Good afternoon, everybody. Thank you very much for attending this Investor Meet Company presentation of our preliminary results 2022. I'd just like to sort of take the opportunity as opening remarks to just thank all of my colleagues and employees of ZYTRONIC, who I know will eventually get around to sort of reviewing this presentation, as they did do at the interims in May. And thank them for all their efforts during the fiscal year that we've just performed the numbers for. It's been a year of unpredictability, and obviously we'll cover those points as we're going through. I'd also like to take the opportunity to thank the two chairmen during the fiscal year, being Tudor Davies, who stepped down at the AGM in March, and David Buffum, who unfortunately due to illness had to step down at the beginning of October. And we wish David all the best in his recovery going forward. So I'd like to now just sort of move on, and we'll continue with the presentation. The first slide that we're presenting here is just a very quick overview slide, catching a couple of critical points that we'll cover in significantly more detail as we're moving through the presentation. The way that we normally present to the investment community is we usually start off with the financial results for the year, and then move forward through to cover operational parts and marketing and opportunities as we look forward. So at the moment, I'll hand straight over to Claire, and Claire will pick up on a number of points regarding the financial performance of the business.
Good afternoon, everyone. I'm going to take you through the financial results for the year just gone. Pleasingly, we did report a group revenue increase by 5.6%, which resulted in 12.3 million of sales being recorded for the year ended. This was in the main as a result of increased sales into the gaming and vending markets, but also there was a considerable decrease in sales into the financial market. However, we were expecting this, and this is something that we had flagged to the investment community over a number of periods. We showed an improved gross profit margin, albeit quite marginal, to 30.5% over the year. There were a number of factors that contributed to this. In the main, we did see an improved mix of the products sold, whereby we sold more of the larger format, curved and bespoke sensors, which ultimately yield a stronger margin for the company. We were also not exposed to significant rises in utility costs over the period. The group has a purchasing ahead strategy, which meant that we had already bought a significant amount of our utility usage before the price rises kicked in, and that's helped us to not bear the impact of the current costs of utilities. So that's a strategy that we are continuing with, and we're hopeful that that will continue to bear fruit going forward. Outside of the benefits, however, we did see an increase to raw material costs over the year. We had a problem, as did most people who purchase semiconductors and electronic components, in trying to source those types of raw materials. We had to pay, in some instances, costs up to 3 to 4 times our normal costs for those parts. And due to how we work with our customers, we weren't always able to pass on the price rises in our raw material purchases. So that was an area which did impact us in gross margin. We also saw labour inflation costs go up, and that was in the second half of the year, whereby we awarded all our employees a 5.6% pay rise and a 1% additional employer contribution to their pension. We were due to actually, if we set the scene there, we hadn't given anybody a pay award from October 2018. We were due to undertake the next pay award in 2020, but at that time COVID hit and we postponed any future pay awards until we were on a more even footing within the business, which is why we made a significant award in April of this year. We are, however, mindful of the rising costs of living and the inflationary impact that that's having on all employees, and so we do expect labour costs to increase going forward. We also had increased commissions payable over the period as we sold more product through our channel partners. Moving on to admin expenses, we did see a slight saving over the year. In the main, this was due to a reduction in professional fees, whereby in 2021 we undertook the share tender program, and that incurred quite considerable professional fees, as you might expect. However, again, going forward, we do expect that as our sales team continue to face-to-face prospect and we attend and exhibit at more exhibitions, then those costs will increase going forward. EBITDA increased marginally to 1.5 million, and that, with the increase to gross profit, gave us a profit before tax of 7.7 million compared to 0.5 in 2021. Our effective tax rate for the period was 13%. We continue to claim for all reliefs that are available. We as a company have never paid the full rate of corporation tax. However, we are mindful that as the corporation tax has been increased from April 2023, our effective rate will go up also. EPS over the period increased to 5.6 pence. This is as a result of increased profitability and a lower tax rate, but also it is impacted by the lower weighted average number of shares that are in place for the year compared to the same period last year. So for clarity, the weighted average shares in 2021 were 13.3 million, and at the end of 22, they were 10.8 million. The closing shares in issue at the end of September, however, were 10.2 million. So going forward, if there's no change to the shares in issue, the EPS will be calculated on that lower number. However, we are mindful that the tax rate will bear on that result in the year ahead. Because of the increased profitability, again, we have proposed a final dividend of 2.2 pence, which is a 47% increase on the prior year. Moving forward to the statement of financial position and cash flow, it remains strong. We have reported cash at the year end of 6.4 million. This is obviously reduced from the 2021 year end. However, we did give away 2 million through the capital reduction process that we undertook between February and May, whereby we bought back just over 1.2 million shares at a weighted average price of £1.61. This concluded the authorities that were granted at the 2022 AGM. We continue to hedge with our currency, which has been effective over the year. Nothing has changed in that respect. We hedge ahead up to 3 to 4 months, depending on our working capital requirements. And as is the norm within this business, we have more exposure to dollars, and so we have benefited with regards to the exchange rate over the year. Moving on to the cash position and cash flows, we actually utilised cash in operating activities of 0.1 million this year. In the main, that was as a result of increased working capital of 1.4 million, where we had instances of higher stocks and higher debtors at the year end. Stocks were overall £700,000 higher than the previous year. However, what I would say is that the previous year was probably slightly understated from what was the norm, as we'd wound down some of the stocks in 2020 over the course of the recovery of the pandemic. But at 22, the stock holding is probably more in line with what we would normally hold. However, we have also had to buy ahead for raw material stock in some instances because the UK came out of the pandemic quite quickly. a lot of our suppliers and customers across the world were still in lockdowns, which has impacted our operations. So we've bought in advance of raw material stocks to ensure that we have sufficient holdings of the right materials when we need to manufacture those parts. Debtors were overstated at the year end compared to the previous year. In the main, that was due to a £400,000 outstanding debt from one particular customer, which was overdue at the end of September. We didn't provide for this because we had complete confidence that this would be repaid, which it has been in full as we come to present today. However, we did control this situation by postponing any future deliveries into that customer until they repaid their outstanding debt. So what I would say is that the debtors position was overstated at the year end, and had that not occurred, then working capital wouldn't have been as high as what it was. We continue to spend on capex over the year. This was increased from the year before. We invested 0.2 million into development costs and 0.3 million into plant and equipment. We have over the year just recently commenced a new ERP implementation, which is currently in progression of development and installation, and we expect that to complete in 2023. We paid tax of 0.2 million over the year, and we also paid dividends over 2022 of 0.2 million, which was the final payment from the previous year's results. Okay, Mark.
Thank you for that, Claire. Now we'll move on to slide 4 onwards, just starting to look at an overview of the sales and how that impacted the business, and moving then on to sort of looking at what we're working on and what we have been working on and what we're going to be working on looking forward. So as Claire covered, total revenues increased to 5.6%. I think we commentary on the business has always indicated that there is a sort of a second half weighting to the business, and we certainly saw that occur again in 22. It was more back to what I would consider more of a normal weighting in the business. So it was 52% weighted H2 to H1, which was pretty counter to what we'd seen in fiscal year 21, which was a 59% H2 weighting. Which was really the return of delayed orders that had happened through 20 and early 21 regarding sort of gaming in particular. So when the gaming market started to open up, we got orders towards February and March of 21, which really sort of fueled the output that occurred in H2 and improved the weighting in 21. But as I said, this year we're back to more of a normal weighting average. The business continues to be highly geared towards exporting its products, and again this year it was 95%. There has been movement in those numbers, as one would expect. With seeing gaming returning, we've seen a significant increase in product going to Asia, and then saw obviously 5.5 million of our sales going out to countries in Asia, predominantly South Korea. But equally, we then saw a fall in the European sales, which was predominantly driven by the drop in financial ATM sales, which normally would go through Hungary. As I started off in mentioning the unpredictability of the business and the effects that had during the fiscal year, certainly COVID-19 has continued to affect the business and constrain things that we were working on through 22. Predominantly, we saw that in the order intake that we saw, where we had a significant weighting towards first half order intake compared with the second half. And the primary reason for that was, in some instances, we were getting customers, due to knowledge in the marketplace of electronic issues, COVID-19 related issues, were placing purchase orders on us for extended terms that we're going to be taking us into production into the second half of the year, which was abnormal to what we normally receive, where we're normally receiving purchase orders where we're delivering within 30 to 60 days. Claire touched on the electronic component supply. I think again what we saw in the year was not just semiconductors, and I know that has basically been what the marketplace has been portraying, that that in the car industries and other industries, everything was related to semiconductors. But this had a significant knock-on effect right across the marketplace. So even into resistors, connectors, PCB boards. And what we were finding was that to attain levels of stock and get production through to produce controllers for our own products, we were very much hand to mouth and having to, in some instances, to buy components at elevated costs on the grey market. A situation, I might add, that we believe is likely to continue through to at least the halfway point of calendar 23 before we see sort of this situation truly alleviating itself. And then, unfortunately, on top of all of that, we then had COVID re-raising its head with the Omicron variants across the globe in January. I think if everybody had read commentary that was made at December 21 regarding the preliminaries, we were very bullish about basically everything returning to normal, and our business development and marketing practices would all be restarting at elevated levels in January of 22 onwards, which unfortunately we really didn't see until very much late April and beyond, and even still constraints that was occurring in Asia in particular that really didn't alleviate itself until sort of the end of the fiscal year, and we started to be able to make visits into that territory in October onwards. Obviously, commenting on the Russian war in Ukraine, it did have an immediate impact on our sales of EMI products through our channels into that territory. Part of the reason for that is that RFI EMI products are exported under what they call a dual use standard. And what this means is, although we may be selling to people that might be using them in an industrial application or a medical application, those same products could quite easily be used in a military application. And without getting qualification from the customers exactly that they were going to be used at that, we ultimately were not able to make export sales without that knowledge and being able to present that. In total, our exposure to that particular area in a year runs at an average of about £100,000 per annum. So we've seen very little sales, obviously, in 22 as a consequence of the Russian war on those particular products. The other side of it as well is that we had been working and engaged in the encrypted touch with our partner in that area, Cryptera, a Dutch company, who take our product, incorporate it with their encryption technology, and then upsell that product, which they call Crypto Touch, to OEM customers. And a lot of work that they'd been doing in that area, unfortunately, was with Russian banking customers. And when the Russian war initiated, both ourselves and Cryptera basically had to state that we were not going to be continuing development work towards providing solutions into that particular market area. Moving on to the next slide and looking at more detail of the actual sales and markets. Obviously, what stands out is that gaming showed a 62% increase in the year, and vending strengthened with a 39% increase. But as we mentioned in the commentary, the increase in value that we saw in the gaming was almost offset by the reduction that we saw in the financial marketplace, which actually reduced by 59%. Touching on financial first, financial has always primarily been ATM related products, and that was touch as well as non-touch items. So the security glasses that would sit into a screen where it wasn't touch active, and you just were accessing sort of buttons on the ATM themselves. That was a primary marketplace for ZYTRONIC. With the advancement of the ATMs and the COVID effects of the cashless society and a move towards the digital society, generally what we have been seeing is a reduction in the deployment of new ATMs in total, but the general reports of revenue coming from the ATM marketplace is showing to be increasing because ATMs themselves are becoming more are showing higher use of and functionalities rather than just being very simple cash transactional items. Now, the commentary that we'd been speaking over a number of years was that we expected the non-touch element of the marketplace to continue to wind itself down, as it was, excuse me, as it was very much a plain glass laminate solution, and that other areas in the world would be probably producing them more effectively and efficiently and cheaper than we were able to do, and certainly we saw that. But the big change really came also from a couple of years ago, when the ATM customers that we deal with were starting to look at the development of their newest platforms that they would be taking to market in 21, 22 and beyond. ATM platforms normally run on a development cycle of between 5 and 10 years. And obviously over that period of 2003 through to now, we had at least been through 3 platform redesigns with the ATM customers that we dealt with. Unfortunately, the ATM customers at that time were looking to greater enhancements of the performance characteristics of the touch technology, and improved pricing. And ZYTRONIC was not quite at the stage with its multi-touch technology to be able to offer in a solution at that time when they were looking at the redesigns. So unfortunately, that's where we lost the designing and the platforms there is to market at this moment in time. As we look forward, we obviously are looking at the time when the ATM platforms will be going through another reset and another redesign, and at that point, obviously, ZYTRONIC will be coming back in and looking to see if we can get our product redesigned back in. Obviously, we're very hopeful that the touch products that they've used at that date, certainly in certain environments, have not been performing at the same sort of levels that the ZYTRONIC technology is capable of. And we're also very hopeful that the encrypted solution will find its way into the ATM marketplace as far as redesigns or products as it moves forward. And as I say, we were unfortunate really with what happened with Russia, that probably didn't happen in 22. With gaming, I think the expectation of an increase in gaming was not was something that we had expected. We saw a return of the delayed programs that we'd been working on, and we're expecting the volume of those to have picked up during the year, which is obviously what we did see. What I would state is that that a lot of commentary has been made previously regarding Macau, Las Vegas, Australia, and that when things are improving in Macau, that hopefully will have an impact. What I would say is that for ZYTRONIC, the primary market use of our products and in the designs that we work on is going through Las Vegas and to a lesser degree Macau, which is really again why when we saw Las Vegas starting to re-engage and come back to life after the pandemic, that's when we have started to see the improvement of sales coming back through the business. What I did comment on in the overview was that we didn't really see a lot of new innovation that had gone on in the marketplace, and arguably everything that we deal with really is key is designing into new innovative products and designing into new designs of products going forward. So although generally there's been an increase in gaming, and that's really as a consequence of the volume of products being sold, the key more to the future is getting your products and your capabilities designed into new platforms that will be coming to the fore as time moves forward. And the real statement I was making was during the COVID period, really none of that work had been undertaken by the gaming companies. And even in we weren't really expecting that happen until everything was back to life for them. And really that was 2023 was really the start point on that. Vending, particularly another growth area for the UK, for ZYTRONIC, sorry, what we saw was growth in the US sales. And this was for another drinks dispensing type of unit that our product is used in. It's an unbranded product, so it's not for one of the 2 major drinks companies, but arguably in the sales process, their drinks may well be used on a particular product. Again, we're not, although designed and specified by that end product OEM, we are providing our product through the display integrator. for that particular product. What we also saw in a couple of regions in Europe, France and Spain, was an increase really in electric vehicle charging deployments. And really what we're seeing in that particular area, and I commented that I said it was regionally fragmented, and what I was meaning by that was at this very moment in time, if there's deployments in France, for instance, it will be French companies that are doing it. If it's in Spain, it's Spanish companies that are doing it. What we're not seeing but are emerging is more the global players that ultimately will be looking at designs that will be able to go across numerous geographies and countries, such companies as ABB and Tritium alike. And we're just really starting to see the emergence of those companies and starting to see engagements coming through on that side. Industrial, pretty much static in the year. It's one of the areas that is a constant for ZYTRONIC as far as where our USPs of product sits. And signage, again, slightly down in the year, mostly associated with not seeing US smart city street furniture deployments happening during the COVID period, and still not really engaging at this moment in time. Regarding other, which is a myriad of the other markets that we're involved with, telematics, health, military, etc., medical, and normally smaller sizes, the drop in performance that we saw in this particular year has really come from one single item, or at least nearly 90% of that drop has come from one area, and one company, and that was related to a Singaporean medical device manufacturer that we were dealing with in 20 and 21, particularly related to COVID testing. And there was been no sales of that particular product to them in fiscal year 22. I think the other point to sort of pick up, and just going back to financial, is we can see that this now has attained sort of position 4 in our markets. If one's looking at the graph, historically it's been either position 1 or position 2 for a number of years, and arguably in 21 it was position 1 because of the drop that we'd observed in gaming compared with the other years. But I do believe that we're probably now at what I've described as maintenance type of levels. And that's the marketplace for us is the continuing supply of spares and product that be used in existing deployments where they're doing fascia uplifts and such like. So no new bills per se, but certain banks will still be ordering the existing platforms. They don't necessarily always jump straight into putting new platforms in. So there will be some sort of new product or new ATM products still going out, but at significantly lower rates due to that conversion. And if we then look at the next slide, again, it's really just covering a couple of key points of looking at the changes that we observed in the particular market areas for the touch technology. I mean, obviously, what was disappointing in one sense was that we actually produced and sold less touch sensors in 22 than we did in 21, albeit that we saw an increase in revenue coming off the business in totality. But the key really to what we saw is on the right-hand side of the graph, where we see the growth in gaming and vending in particularly large sizes, and large sizes being greater than 30 inch. So with the business, they carry a greater revenue generation and significantly improved margins compared with the smaller sized products. So seeing a combination really of the larger sizes, the multi-touch technology sensing products, and then also the curved products all increasing in the volume produced. That's really where we started to see the offsetting of some of the reductions that Claire talked about in costs in the margin being offsetted by the change in mix of the particular product. Obviously, what is also pretty visible in the graph is the degree and level of the change in the financial marketplace of touch in the volume that's really went from what it was in 21 to 22. And the other side of it really was the offsetting in the industrial marketplace of a decrease in the volume of those produced in the smaller sizes, compensated by the increase in the volume in the medium size range. So again, it's this mix consideration that Claire was mentioning when she was speaking about gross margin. If we then look at sort of developments within the business, I mean, one thing I touched on really at the beginning was the issues that we had in supply chains in the electronic marketplaces. Unfortunately, that meant that R&D was heavily involved throughout the year, and as I say, it's continuing at this moment in time, in really sourcing and approving, and in some instances redesigning the controllers that we produce to sell out in combination with the manufactured sensors that we do to the customer base. And as I said, that was a constant, not only because semiconductors and processors were reduced in availability, but it was also because of issues associated with getting resistors and capacitors and connectors and PCB boards. What they also spent a lot of time on, as we were then moving towards the expos that we were planning in 22, was the productionization and the and presentation of the Zybrid Edge type of product to the marketplace, which we did at the ISE Expo, and then continuing with the developments of the electroglass design concepts that we'd been working on, that we were gearing up to present at the Light and Building Expo. In combination with all of that was the work that we were continuing to do to try and drive innovation in the premise of our offering into various market areas, and one of them being predominantly gaming, was the potential use of the microfine filament technology that we use to provide our touch sensing capabilities, and determining whether or not we could utilize that and added it to it to basically power low voltage devices that we may be then attaching to products in the form of the touch sensor, or even using it as I/O lines to do data communication. And a lot of that was then we brought together under one umbrella when we did the expo unit for the latest G2E expo in October, where we developed a complete cabinet design to present, showing all of the aspects of this, including the work that we've been doing in advancing glass processing, so to enable us to do more features on the glass, either taking material away, or in some instances we've been working on getting glass molded products and using them as novel added structures onto the touch technology to create localized touch interactivity in the form, say, of a robust tactile but non-mechanical button, for instance. And also we're looking at yield improvements, and have continued to look at how we're going to improve yield as we've been moving through the process. And one of the key areas that we'd advanced was the bonding of our sensing filaments to the flexible tail system that we use to connect to the controller. And a couple of years ago, I think if everybody can remember, we designed and developed and brought in a novel laser bonding piece of equipment to do that. What we had been looking at in 22 was how could we improve on that particular product? How could we improve on and provide improved production capabilities across the site? But more importantly, provide ourselves with risk mitigation, i.e. we did not just want one machine. So again, R&D had been heavily involved in designing and then sourcing and then having a new unit built, which has just come into us and is going through sort of factory trials at this moment in time, and we fully expect to be production ready in the very early part of calendar 23. With all of the advancements that we've been looking at in the development of the touch technology, we had 3 of our patents that were still under examination stage pre-22, granted during the year 22. And we now have an IP portfolio where we have 12 internationally granted patents. And we made one more application during 22, which was around the novel glass structure, which is termed an interactive device. And that's basically, at this moment in time, takes those applications made and those presently still under examination by patent officers, also up to 12. Obviously, it in no way guarantees that because you've applied for a patent that a patent becomes granted, but there is a possibility that we could see another 12 granted patents as time moves forward. If we then just sort of look at the next slide, which is really talking about marketing, and really it's just continuing to reiterate the impacts, and I'll reference those impacts again when I move to the next slide. It's really referencing the impact that the COVID delays had on the business, and in reality how that's affected the marketing exercises that we ultimately go through. As a business, a lot of our engagement really is coming from doing trade shows. I think again we've explained that the basis of the business is very much a technical, consultative sales process, and it benefits highly as a consequence of that with face-to-face engagement, and a lot of that really is coming from us exhibiting and also participating in at trade shows, and conversing with the tier partners that we will have in that particular area. ZYTRONIC as a component is selling up the chain to a display company, for instance, that will integrate it. And in some instances, it will sell straight to the OEM because they're the people that are building the equipment. But equally at the expos, from a marketing perspective, what we're trying to do is get the conversations with end users, where they will ultimately be telling their suppliers to utilize the ZYTRONIC touch technology. So it's pretty much, we're trying to generate both a push and a pull within the sort of the environment that we're working in. But unfortunately, as I said, we've had some impacts on that, and we can track that and see the effects of that as we roll through. We did undertake several trade shows in the year, which benefited really, although not available for the UK people to get to them, and although would have under normal circumstances been international trade shows, very much unfortunately ended up being regional trade shows. So G2E in October 21 was very much just attended by local US people. Touch Taiwan in May 22, unfortunately was more with, because of the lockdowns that were going on, there was only Taiwanese were attending it, and Digital Signage Japan, the same as what we saw in Taiwan. But we were able to participate in the rescheduling of ISE and Light and Building. Unfortunately, ISE moving from the February slot as a consequence of Omicron, and then being rescheduled to May, and Light and Building being rescheduled from March all the way through to October. And meanwhile, whilst all that was going on, we were very much engaged with our channel partners and aiding them in providing material or support, or in some instances some financial support, in allowing them to show our products at trade shows that they would be undertaking. Around all of that, we obviously continued with all of the release of case studies, white papers, the digital marketing that we were undertaking, and focusing on the application areas that our product was going into. I've referenced a few of those. They're available on the website for anybody to look at. And I would always sort of comment that for the trade related news regarding the company, it's much better to look at the ZYTRONIC displays website, which is geared towards the trade environment, rather than ZYTRONIC PLC, which is the investor community. In combination with all of that, we started to look at how we could enhance the personnel within the business again, as we were moving through and ensuring that what we were going to have is the right building blocks to move ourselves forward as we were coming out of all of the related problems associated with COVID and looking towards the future. So part of that was the recruitment of a marketing specialist, as we're now seeing the marketing activity starting to pick up and significant calendar of future trade shows. But in combination with that, we also look to strengthen the electronic engineering side. We increased the capabilities of the software engineering side, and obviously we were recruiting direct labour employees for the production side as it was going on. Also, I would sort of say we've looked at improving US sales after sort of slightly reducing it during the COVID period. So although it was a 1st of October appointment, all of the development negotiations and bringing the person in was occurring through fiscal 22 or the latter end of fiscal 22. So what we now have as appointed is a Californian-based West Coast business development manager with a vast experience in the marketplace, now employed by us and starting to go out and undertake the business development work in that particular area. And then moving on to the next slide and opportunities. And as I said, really how this sort of impacts the points that we've been leading up to regarding marketing delays and things that had happened. Again, I think anybody that's looked at the commentary in the annual report over a number of years, you'll see various sort of aspects of how we've been trying to present it, either looking at its entirety or looking at movements in it from one year to the next, or just looking at what we define within the system as projects, which if you're looking at a hopper type of system, one would really define as the exiting point of the key high probability action opportunities. Excuse me. But I thought this year probably it was best because of everything that had happened through COVID was to show a much broader picture of how we'd seen effects in the business and how it had affected the opportunity log and the pipeline moving forward. So again, what I've done is we've graphed up the month-end closing points of our system. Being dynamic, it is changing all of the time. It's changing day to day, week to week, and within a month. But choosing month-end is a relevant time period point, and showing how not only the number of opportunities are moving at that time, being the ones that are open, and the customer projected lifetime value of those opportunities at that time. So again, what we can see from it in reality is that, you know, the last major 2 trade shows that we did leading into the COVID period was G2E in October 2019. Before obviously everybody was aware of COVID and the effects of it by come January 20. And we can see how that was maintaining a high level of opportunities, high level of value. We then done the ISE Expo in the middle of February 20, and we see sort of the pickup in volume that was occurring post that as the UK had locked down come March. But then really what we then start to see as due to global lockdowns and the inability to do that face-to-face marketing work, business development work, was the sort of the steady decline of the work that we had been doing in those opportunities converting either into production or being closed because they were then either they were lost or won. And how that over the period, as we've seen a decline of our inability to filter more in than was ultimately coming out at the time, taking us right down to a sort of a bottoming point come the summer of 21. Now, round about the period of summer of 21 was the time when we just started to see degrees of engagement coming back. If I go back to, we did in that year Touch Taiwan, we did in that year digital signage Japan, following up with, as I mentioned, G2E in the October of 21. And we can see that the effects of those just starting to edge an improvement coming through. But then obviously in January we get the Omicron variants and everything closing down again, so we get a little bit of a retraction. And then, you know, come sort of May onwards, we then start seeing the engagement of ISE and get basically being able to get our people out talking to people again. So the benefits really of the engagement going on, the face-to-face business development, starting to show the rebuild of the pipeline, and arguably an acceleration of it as we're now starting to get much better, fuller engagement and coming back to more normality levels, which was equivalent of what we were doing pre-pandemic. Obviously, at the end of September 22, that's 484 opportunities. That's obviously up compared with the closing point in September 21, and the custom projected lifetime value of that is sitting at about 59 million as we stand, but still some way off the point where we were pre-pandemic. Vending's accounting for a larger proportion of that at this moment in time. Certainly a significant growth area for us. We have a lot of opportunities in the vending area. You know, 156 of those open opportunities are for vending, and that's accounting for about 33 million. As it stands at this moment in time, not a lot of that really is in electric vehicle charging. That's accounting for about 7 of the 156 and about 1 million of the 33 million. Where we are seeing a lot of the opportunities coming from with the work that we've previously been doing in the engagement and everything opening up now is what we refer to as product vending, which is anything from, you know, it could be coffee, it could be food, it could be medicines, and about 27 of those 156 are in that particular area, and that's accounting at the moment for about 21 million. And just really winding up the end of the presentation, just a quick summary and outlook slide. Again, I won't touch on all the particular areas. I think you know, we've ultimately seen an improvement in 22 over 21, but there's been a lot of unpredictability in the supply chains, our customers' markets being affected by that as well, which is just retracted as slightly, but the product mix has been in the right direction. We concluded the buyback process that Claire mentioned by May 22, and in combination with what we've done over the fiscal year, that had returned another 2 million of cash to the participating shareholders. It allowed us to cancel approximately 1.3 million shares. So in combination at this moment in time, between what we've done with the tender offer and the buyback process, that has had us return to participating shareholders about 8.7 million of surplus cash. The resumption of the face-to-face marketing expected in 22 was delayed, and we can see the effects of that. The global impact of the supply chain, I believe, will continue through certainly this period and probably halfway through calendar 23. We may comment on the 2 months of order intake in the outlook statement, and again we can see partly that's still coming from not only supply chain related issues, but the fact that the opportunities log and the fuel that is going to be driving everything bottoming out at roughly in July 21. So that with a 2-year average maturation period from us engaging on an inquiry to us seeing something go to full scale production, at this moment in time it has about a 2-year average. So we're just starting to come out of the period where the impact of the lowest part of our V-shaped opportunities graph is just starting to now sort of unwind itself and come through. So the expectation really 6 months onwards would be an acceleration of all that coming through. And I guess the real key matter for us all is that, you know, we're now really encouraged by the fact that we're as a business, with the people that we're able to talk to and drive forward with, you know, business development and marketing activities are very much on the up, and they will do nothing but positively impact the opportunities pipeline rebuild. That sort of concludes the presentation for today. I'll hand back to Jake now, if that's okay.
Mark, absolutely, and Claire as well. Thank you very much indeed for your presentation this afternoon. Ladies and gentlemen, please do continue to submit your questions just by using the Q&A tab that's situated on the right-hand corner of your screen. But just while the team take a few moments to review those questions that were submitted already, I would like to remind you that a recording of this presentation, along with a copy of the slides and the published Q&A, can be accessed via your investor dashboard. Claire, Mark, as you can see, we have received a number of questions throughout your presentation this afternoon. So thank you to everyone on the call for taking the time to submit their questions. And Mark, Claire, if I could just hand back to you to respond to those questions where it's appropriate to do so, and then I'll pick up from you at the end. Thank you.
Yeah, no problem. Thank you very much, Jake. I can see there's been a myriad of questions coming in, but I do notice there were a number of stages as we were going through the presentation. And I do believe that we've probably answered quite a few of the early ones as the presentation went on. But certainly, as I'm just going down them at this moment in time, yeah, I mean, there's a question. The first question I would sort of try and answer is what benefit does the CRM bring, and what resources are required to maintain it? Closed opportunities can go down as lost. Are there not situations where no end product materialized? And this was genuine inquiry. What happens if you have several customers pursuing the same piece of business? Is the value multiplied? Yeah, quickly answering that one. The CRM system was something that we introduced after we saw a dip occur in the business around about 2012. So we've had the CRM system in various guises been pretty active since that point going forward. And it's just really a tool for us to gather all of the input points that we have, be trade shows, be direct business development, be from our channel partners, be from advertising campaigns that we undertake in some instances, to put it all under one roof to allow us then to evaluate and monitor it. You're quite right with the comment, is the multiplication going on? That certainly can happen as far as being a number of potential customers chasing the one final output. But we're monitoring that and ensure that there's no value multiplication that ultimately goes on. So in a lot of instances, for instance, we would ultimately then be closing down the opportunities from the customers that potentially had definitely lost that end application program or project, but it wouldn't necessarily affect the value because we'd be ultimately left with the one customer that we were ultimately going to be going ahead with, and hopefully they would move to a successful outcome. I think there's another question really, cash reserves to do an acquisition. If not, is that because there are no companies worth buying, or you feel that you do not have the management depth? I would certainly say that the cash reserves have always been there to allow us to undertake any degree that we saw necessary, of whether it be an acquisition or not. Certainly there's been things that have been looked at in the past, but up to now, the strategy of the business has been to continue to look to good organic growth within the touch ecosystem that we're operating, and not necessarily look to undertake acquisitions. That may be a change that we look at when we're evaluating looking forward. But certainly it's at this moment in time, on the things that had been looked in the past, we did not see the effectiveness of buying them as being something that would be contributory without being highly risked. And I think that was the key to it at that point, was trying a little bit to mitigate risk as we were undertaking the organic growth strategy that we were undertaking at that time. Can an investor expect to see another buyback during the course of this year? Well, I'll hand over Claire to answer that one. I'd say that's more of a financial question.
Yeah, thanks, Mark. With regards to the authorities that were granted at the 2022 AGM, we have utilised those in full. There will be another authority proposed for the 23 AGM, and it will be dependent on that authority being passed as to whether or not the company has the ability to undertake another buyback. At the minute, we have no firm plans to do so, and we are conscious that with increasing costs going forward and working capital requirements, that we might feel that the cash on the balance sheet is sufficient for growth in the business instead of undertaking a buyback.
Thank you, Claire. Just looking down at other questions. Yeah, question again, do you invoice any customers for product development as they may not guarantee a resultant order? We do. It's a combination in truth. If we're doing very bespoke considerations around development, we may well not charge them any development costs, because ultimately we want ownership of whatever is being designed and developed, to ensure that we can offer it out across a broader breadth of our applications. However, if there's instances where there's engineering costs associated with it, it could be to do with printing, or it could be to do with glass processing work, and we may ultimately have to buy tooling and such like to do all of that. We would then charge a sort of development costs associated with that particular aspect of it. I think just picking up on one file, because I know we're sort of running right up against the hour time slot. There is a question sort of saying, where are your products made? And I would, to answer that quite quickly and clearly, is we're a UK-based company in the Newcastle upon Tyne area of the country, and we have 3 factories here, all are part and parcel of the manufacturing process, and we do not manufacture any other products in any other place in the world as it stands at this moment in time. Jake, I know we're practically right up against the time limit. There is a few more questions that might take a little bit longer to answer, but we'll certainly pick them up in written form and provide answers against all the questions after the event.
Mark, that sounds great. And obviously, we will provide all those questions, as well as any more that do come through, back to you immediately after the presentation has ended, for you to review, to then add any additional responses, of course, where it's appropriate to do so. Mark, perhaps before redirecting those on the call to provide you with their feedback, which I know is particularly important to yourself and the company, if I could please just ask you for a few closing comments to wrap up with, that'd be great.
Yeah, I think I'd finally like to just again thank the Investor Meet Company for hosting today. It's been the second one that we've done, and I think there's a lot of benefit, not only to us as a company, but for our shareholders, to get an improved benefit of information to them. I think, just to wrap it up quite clearly, I would just describe COVID as being a not very nice period for the business. It certainly was quite damaging, and we can see that in all of the data that we've got. I think we're now starting to come out of that time of flux, and as a consequence, we can see the benefit of the organic work that we'll be undertaking to rebuild and drive the business back towards the performance levels and improve upon that it was pre-pandemic.
Mark, that's great. And Claire as well, thank you once again for updating investors this afternoon. Could I please ask investors not to close this session, as you'll now be automatically redirected for the opportunity to provide your feedback, in order that the management team can better understand your views and expectations. This will only take a few moments to complete, but I'm sure will be greatly valued by the company. On behalf of the management team of ZYTRONIC PLC, we would like to thank you for attending today's presentation. That now concludes today's session, so good afternoon to you all.
Thank you.